Hello, I want to welcome everyone participating in today's webinar, How to Prepare a DCAA Compliant Cost or Price Proposal. My name is Yevgeny Suhenko, and I am a supervisor at GRF CPAs Advisors, formerly known as Gelman, Rosenberg, and Friedman CPAs, and I will be today's moderator. I'd like to start off today with some quick housekeeping items and explain what you will need to do to earn CPE credit. Participants seeking CPE credit today must complete and submit a short evaluation survey that will appear automatically immediately following the webinar. You will be asked to recall these words in order to receive credit. Please write down the CPE words when they are given and keep them until you receive your certificate, as they will not be provided again. If you have any technical questions or issues during the webinar, please use the questions function to speak with our webinar administrator for assistance. The slide deck and recording from today's webinar will be available for download at the link shown here. You will also receive a follow-up email with direct links. Technical support and CPE questions may be addressed to Dominic Acosta at dacosta@grfcpa.com. Today's learning objective is to provide attendees with a better understanding of the submission requirements as well as the DCAA audit process, and 1.5 CPE credits are available for this webinar. And with that, I'd like to introduce your presenters for today's webinar. Paul Calabrese is a principal at GRF in the Outsourced Accounting and Advisory Services Department. Mr. Calabrese brings a successful track record of working with both nonprofits and government contractors. His remarkable career includes positions with the Air Force Audit Agency, DCAA, and 3 government contractors, in addition to 20+ years in public accounting. Chris Brown is the president of Aldebaran and has over 25 years of experience with the development and promotion of the SYMPAQ software product lines. He has personally helped hundreds of government contractors achieve compliance through the use of cost accounting software that is purpose-built for the government contracting industry. And on this slide, we're just listing a few sources, and this is where most of our webinar is based off of, and all of these are government documents, so we encourage you to check it out if you're interested in more information. And here we just have a brief overview of our webinar and what we're going to cover. And with that, I'll turn the presentation over to Paul.
Thank you, Yev. Well, today we're going to be talking about all of these items that you see on the overview. But Chris and I would like to let you know that this is one part of doing cost proposals for the government. And if you just took a 20,000-foot view, which you won't see on the slide, you'll see that there are many different kinds of procurements with the government. There are GSA, multiple award schedules, and they're done a different way, supplies and services. There are also FAR Part 12, commercial item determination. If you can get through that process, then your items will be sold as commercial items under FAR Part 12. But a lot of it is done under FAR Part 15 that they call negotiation. And negotiation is a term of art. It's pretty much what the government wants in their form, but there are different kinds. And so it says that when the government goes out to let a procurement for which you're going to eventually respond with this cost proposal information, the first thing is, do you have a commercial item under FAR Part 12? Do you have a GSA schedule? Those things are kind of worked out and predetermined. If you don't, then it's going to come under negotiated. Can we find it through price reasonableness? So is your price reasonableness? Can we check with other contractors or other methods and see how that's done? And if that doesn't work, then is there something other than certified cost of pricing data? And then finally, certified cost of pricing data. You can actually see that the government, you may say it's all about bureaucracy. No, in this case, they want to keep the whole procurement process, acquisition, down as low as they can in involvement. And they'd like to just say, hey, we all have everybody's prices and let's just do it. It just isn't that simple, especially when you get to cost of pricing data. It means you have something very unique. And it could be fixed price, and often it's cost reimbursable. So, or time and material. So that's really the world we're going to get into. And when you deal with cost of pricing data, we'll be talking about something called effective pricing. And it's a whole world unto itself, and nothing is like the government because the government is not a person, just like a corporation isn't a person. It's made up of people. And so they must develop, or they've developed rules that kind of help you put them on an even par. And that's where we start. First, we got a polling question.
Great. Thanks, Paul. And the polling question is, what are your organization's biggest challenges with regards to DCAA compliant cost proposals? Is it understanding what effective pricing is and where it applies, knowing the types of cost or pricing data that are required, having enough detailed historical data for cost estimating, or just knowing the DCAA requirements for price proposal adequacy? So with that, please take a moment now to answer. While everybody is submitting their answers, I'll provide the first CPE word. The first CPE word is cost. If you want to receive CPE credit, please remember to jot these words down because you will need them for the survey following our webinar. Again, the first CPE word is cost, C-O-S-T.
It's interesting. And Chris, of course, at any point, if you want to talk.
Sure. Yeah. So we've got about 20% of the audience is saying that they don't understand what the effective pricing is, where it applies. So of course that's one of the agenda items today. And what kind of data is required? You mentioned commercial pricing. Maybe that would be one place to start. Having enough historical data for cost estimating. That's almost half the audience right there. And again, what we're doing is this is of course multiple choice, so it's not going to add up to 100%. And then the DCAA requirements for price proposal adequacy. So yeah, that's really a good measuring stick for how we're going to present it today.
Okay, speaking of cost of pricing data, believe it or not, and you're dealing with the U.S. government, is more than what we just said. It's more than cost of pricing data. It's all the facts that reasonably contribute to the soundness of the estimates. So really, that cost and pricing data could be a vendor quote. Non-recurring engineering costs, I think, is generally the non-recurring piece. But then if you're into the production world, changes in production methods and purchasing volumes, those kinds of things, anything that deals with projections of business prospects, objectives, and related operations. We didn't put down there, I'm surprised, but of course, indirect costs and the indirect rates and how they change and the timing of when you have them, because that's something they love to pick on. Make or buy, the most common one, estimating resources to attain business goals, unit cost trends, but here's the big one, information management decisions that could have a significant bearing on cost.
And we certainly will touch on indirect rates. It is part and parcel of this presentation today.
And just quickly going back to the make or buy decision, let's just talk about something very simple to give you a sense of what the government's concern is. Think about, you have and this really relates where DCA gets involved into fixed price, okay? The CPFF, cost reimbursable, it's hard to really make a case because it only impacts fee. But fixed price, this is what we're talking about, make or buy, and in the sense of a service organization, that would be having a subcontractor. You want to comply with your small business subcontracting plan. So you have XYZ, small business, and they have $750,000 that they can contribute of a $2 million cost proposal. Actually, let's take it back. They'll contribute $1 million. So they're really contributing half, $1 million of $2 million. Now, let's say after you've made the agreement on price and you've done all the good stuff, you really never intended to work with that group. Just be devious here. So you could do it in-house for a lot cheaper. So now, let's say you could do it for $750,000. So really, your true cost and pricing for yourself, if you did it in-house, is $1,750,000. So that means the delta between 2 million and 1,750 is 250,000. And if it's fixed price and they awarded it to you for 2 million and you can do it less and you knew you could do it less and the government relied on that, that's defective pricing. Okay. That's what we're trying to talk about, and it's always good to use a simple example. So the government is less concerned about, well, they want you to be as accurate as possible, but no one's estimating. We can't read minds. We don't know the future. You can play with that 8 ball all you want, but they are concerned about including the basis of how you came up with those costs. So the Truth in Negotiations Act, for which this was based on originally, we call it TINA, is really now referenced as the truthful cost or pricing data. No one uses that odd term. They still use TINA. DCAA, you'll see, will still refer to TINA. So we'll just call it TINA. And basically, TINA is to put the government and the contractor on a level ground and be treated fairly. Because let's face it, on fixed price, you could do a lot of gaming to make more money. And I mean, that's what businesses would do, but that's inappropriate. So it's all about the current, accurate, and complete submission of cost of pricing data. If you don't comply, you have interest and penalties, and that's referred to defective pricing. It applies on all negotiated FAR Part 15, prime contracts, mods, subs, and now the new threshold is $2 million. And it equals also the same threshold for the cost accounting standards, the minimum cost accounting standard item that's covered is $2 million as well. So they wanted to keep these things forever in parity, and it went up recently from 750,000. Okay. And this is an exception, and the more I kind of scratch my head, but it is an exception for the lack of having this requirement, like for the small business SBIR research or STTR, the small business technology. So you can look at that if you're in that bucket. This is what they put in front of you. Sign it. It is a red flag, red flag. Please understand, if you're signing a certificate and it's negotiated fixed price, especially, well, cost plus, of course, this is serious, and this is where we give you a little bit of advice, and the government tells you what you need to do. This, and I'm going to read this one piece. This is certified to the best of my knowledge, belief, cost of pricing data, and required under FAR, whatever, either actually or by specific identification in writing to the contracting officer or to his rep of this proposal are, and this is the key, accurate, complete, current, notice, the date of the agreement on price. Those are the key things, and it includes if you had for pricing rate agreements, advanced agreements, or any other agreement. So if they're telling you to sign this, that's when this starts. So there's a, like we said, a price reduction remedy. Contractor doesn't submit the current cost or price, and the government relied on that erroneous or defective cost data. Usually, when you have defective pricing, you have problems with your estimating system. If you've heard of the DoD business systems, they have one that's a formal thing, and a great checklist to use is the estimating system under the DFAR. So, you know, as contractors probably like, I did work at a couple, and it's a pain to put these things in, and you need some experts and so forth if you don't have them working for you. But it is something you definitely need to do. You need to put in compliance, you know. And if you don't have adequate or supporting data. So if you don't have an adequate system, estimate. And that means your cost and price proposals, according to even DCAA themselves, would say are not well supported. Bad estimating, what does that equal? Overstated fixed price invoicing, progress payments, and so forth, milestones. Invoices are correct. There's another 2 words there in red, false claims. False claims, and the False Claims Act says, first of all, if they determine it to be false or erroneous, you're fined between $5,500 and $11,000 per invoice. And the civil division of DOJ will say, oh, let's just fine them for the total amount and see what we get. So if you do that over a year, you're over 100 some odd thousand just in penalties. So it's something to think about if, again, you're certifying and then you get under this process.
So yeah, I'll give an example here of effective pricing, something that I came across many years ago. And on the surface, it didn't seem like the contractor was doing anything wrong, but the prime contractor had a sub. That sub was a machine shop. That sub was providing a specific component for an assembly that the prime contractor was providing to the government. Well, he determined, the prime contractor, that is to say, that he could make that part cheaper, or source it to a less expensive source as opposed to the sub. Well, the sub suddenly realized, hey, I'm not getting any more business. What's going on with this contract? Has there been a termination for convenience? What's the deal? Well, that filtered up to the government procurement office, and then they launched an investigation. And while the business owner was thinking, hey, this is business, it's fixed price. If I can find a lesser expensive source, then that's just more profit for me. Well, guess what? It didn't end well. 6 years in jail for that. So there's defective pricing for you.
And jail time, which is really serious.
You may not have served the whole sentence, but it was still pretty harsh.
It is very harsh. That's a good lesson example. Okay. All right, so we're going to go to yes and another polling question.
Sure. Thanks, Paul. Yep. So our second polling question is, who is most responsible in your organization for understanding proposal submission requirements? Is it your capture managers or business development personnel, your contract managers, your accounting and finance personnel, your technical and operations personnel, or your CEO or other C-level personnel? So please take a moment to answer. While everybody's submitting their answers, I'll provide the second CPE word. Our second CPE word is contract. Remember, if you want to receive CPE credit, please jot these words down because you'll need them for the survey following our webinar. Again, the second CPE word is contract. C-O-N-T-R-A-C-T.
Well, there you go. Accounting and finance personnel. 1/3 of the respondents said that's where the responsibility lies. But it's a nice even distribution. Ultimately, if the CEO is signing the certification, perhaps there's that aspect of it as well.
Or small.
But yeah, not too many technical or operations personnel. That could be your COO, I suppose, but that can fall into the 5th category as well. Contract managers to a lesser extent. But you also got the folks on the front end, the capture managers and business development personnel. That's where they're probably, dotting their I's and crossing their T's and making sure that everybody understands that there's a certain requirement. We're going to go into the requirements here, and you can see what makes an adequate cost proposal and what are some of the common findings that the DCAA has and why they where the red flags are. So, thank you.
Most of you, if you've gone to various CPA societies or like the Institute of Management Accountants, DCAA speaks often at these various venues. And this is an often used slide by DCAA we took from them. This is really their slide on our format. And they're the top reasons for inadequate contractor proposals. I mean, you got to start with, if you're familiar with the ICE submission, you submit it, and then the government says, okay, it's all right, now we'll audit it or we'll give you rates. And it's the same thing here. If you've got a cost proposal or a price proposal, and they start to look at it, and it just, look at it this way, and they look at it this way, and it just doesn't make sense. They're just going to turn it back to you and say it's junk. The difference here between an ICE model submission and the cost proposal is that you're hoping you're being reviewed right now. And this could mess up your ability to get a contract. So when you see DCAA and they're coming in, or you hear that the government wants to do a review of your proposal, really there should be a lot of happiness. It shouldn't be a negative thing. It's like, come on in, DCAA. Please be prompt. We'll give you everything you need. I enjoyed when I first went to the first contractor, and a DCAA person showed up. They didn't know I used to work for DCAA, and their jaw dropped. It's like, you have everything. Yeah. But the sad point is that the auditor made was that often people are not prepared, and especially the smaller ones, and that just cannot happen. So the things that DCAA says, and this is DCAA-wide, that they see as a problem, is just variances between what you propose and what your supporting documentation, or they weren't supported at all, or variances between like a prior historical actual cost data and no reason why they may have changed if they should be the same. Now, on that note, DCAA also will say, and you're supposed to say, is there like a prior, if this is a follow-on award, is this similar to the prior award? But sometimes the technical part, if you're doing mechanical things or whatever, they change. That's why the government, they bought all the things they want. Now this is the thing, but a little bit different. And you've got to really know that and caution DCAA that, hey, some things have changed and that's why we can't use the prior stuff. Or we used the prior stuff and we made some assumptions. But detail it out. The thing that really bothers DCAA, and if you're just service oriented, you may not be familiar, is when there's what we call bill of material, where there's a lot of materials and they're making something. And when they're making something, you got this thing over here, this thing. They want to know what is the full picture of all your materials as a direct material cost or subsystems, whatever. So try to lay that out for them well. And they have examples. There are examples around. And again, this is in the material area, unsupported additive factors like leading to duplicate cost proposed. Additive factors on materials might be a scrap rate, an obsolescence rate, or a materials spoilage rate, those kinds of things. And firms that deal with that, they keep track of all that information. And so here we go, rates not based on contract, budgetary, or trended. I mean, just where'd you get your rates from? Well, you need a good system, a good accounting system to get that from, historically. And then the subcontract proposals. Now, the problem there is the subcontractor, I'm not going to give you my rates, so let DCAA do it. But you still have to be involved some way, if not in this specific, well, this is, but as a loaded cost. You should compare it to your cost and ask them, well, why are you so high? And it's probably the burden, or if you have too much profit or something. There are ways to kind of evaluate it, and they still want you to look at it. You can't just absolve yourself because DCAA is auditing it. You don't reflect, the proposal doesn't reflect anticipated cost accounting changes. So there is kind of a, where are you at now and where are you going in the future? And I guess that does get into defective pricing because the future is where the proposal will be. It's not just now, it's many years often, option years. So these are things to consider. And then lack of adequate support for commercial item pricing. Well, that one has to be separate. I mean, you can't and you shouldn't put commercial pricing in unless you've got a commercial item determination under FAR 12, and then you can say, I got this is my letter, I got it approved, blah, blah, blah. Well, you can complain about things that the government requires you to do. When you see 252, that's the DOD FAR. And they now have an adequacy checklist that you should be filling out. And it's very important. And it goes through various things. We're going to show you now on a different document some of those things. Now, this is from the regulation itself, Table 15-2. This is not the most prettiest thing in the world, I admit. But it does give you the kind of information that you should consider. The last things like the requirement for submission of certified cost of pricing data is met. And they go over, again, reminding you if you have certified cost of pricing data, what you need to do. And it continues up to the date of the agreement on price. And that's a subtlety. In other words, let's say back in June, June 1st, 2019. You guys discussed the pricing, okay? But you really, nothing happened. They didn't give you a certificate. I don't know why the government takes forever. But somewhere, 3 months later, you get a certificate. You won. You got the certificate. Did anything change? Tell us where it changed. Highlight it. We have something called, a term called sweeps. And sweeps basically mean that, remember where Chris put up the polling, put up the polling question, said that here's all the different people. You got to talk to each other. Organization means living people. We're not yet into AI yet. We got to talk to each other. We got to communicate. Did something change? Yeah, my rates went down. Okay, the rates went down 1%, whatever rate, and it's fixed price. You got to split that. And you've got to highlight it in such a way. You say, yeah, you see this 2-foot folder? It was in there. No, you got to point it out. So you should have a summary sheet and say, now that I'm signing the certificate, now this is the final date of the agreement on price. Well, if something has changed or whatever, I need to update it. It's so crucial. Okay. Now it goes on and it talks about other things that need to be done, and you'll have this document in our package to you. And there are various standard things that I just don't want to bore you with. But a lot of the stuff you see here is basically, this first page is a cover page. Now they used to have a great form that had all that stuff. And for some reason they got rid of the form, but they still require you to put the stuff in. The form was helpful, but now you just have to go and make sure you have these types of things in there. There is a part in there where it says this is kind of like a follow-on. I don't know where that is. We'll get to it. Then are your CAS covered? Cost accounting standards. Do you have a CAS disclosure statement? Many of you may not have it. You may have not met the threshold. Just to start, the trigger is $7.5 million in negotiated contract. If you don't meet that, and I believe now, you have to be subject to current cost of pricing data if you're fixed price. So be aware of that to be CAS covered. So most people might say a small business. No, I'm not, because I'm a small business, and therefore I don't have a disclosure statement. And again, see, this proposal reflects our estimate, actual cost as of the date, and conforms with the instructions. I'll show you table 15 too. Not so much of a table, but you'll get the idea. But the government has the right to look at your stuff. You're almost expecting them. Come on, DCA, come in. I want you to review my stuff because we need to discuss that. Because I want to have the opportunity to win this procurement. B, 11, looks like 11, or it's just B. B is really critical. When you submit your proposal, try to put in an index or a table of contents and reference it, especially with certified cost of pricing data. So if your assumptions change, annotate in the proposal where it changed and have a summary sheet that says, this is what you saw before, these are the changes, go look in this section, then that's fine. Then the government will rely on your data, and hopefully you're sending your data for an accurate complete. So those are the things. It keeps going on about certified cost or pricing data. There's a lot in here. It's the same things we just discussed that I pulled out and put in the slides. Now, there is a certain format. As you know, there are contractor line items. Item numbers. CLINs, and then we have SLINs under them that are more dealing with funding or other parts, and acronyms and all kinds of fun stuff. So if you got a contract line item, let's just say it's 0001, but we'll refer to it as 1, and then you have a 2. So you're going to have to do a cost element proposal that's by element of cost. Direct labor, applied fringe, DCs, and then overheads, and then G&A, total cost, input base, and G&A, something like that, and profit or fee. You got to do that for every claim, and then a grand summary of all the claims. They want that kind of detail. They don't show it in their example, but that's what they require. So they're saying if you have one or more, I guess more than one claim, put a summary in of all claims, the total price, so they can see it. And that's a good point. I'm just kind of looking through here and see, here's where the cost elements come in. Materials and services, they define it, adequate price competition, and all that other fun stuff, which at this point I don't want to focus on. But I'm just showing you, here they talk about what they would expect for direct labor, a time-phased breakdown of labor, hour rates, and so forth. And indirect costs, how you came up with that. Now, at the very end of this presentation, I guess it's something for contractors, or it's basically, we'll get into it in a minute, information for contractors that DCAA does. It used to be a paper thing, now it's electronic. And we're going to go over a sample proposal. We can't go over everything, but it'll give you the idea. And here is their table 15-2. Isn't that wonderful? Well, the cost elements would go down this way. Then you have proposed or unit cost, extended, and references. And DCAA has a pretty good example about how to do that. So this 15-2, let's try to go back up to the top real quick before we get out of it, is the table that you need. It's in the regulation, but I made a copy, and we will make it available for you. It's under 15, FAR 15 again, 408, table 15-2. This is showing you how to do the cost buildup.
Yeah, it's a nice checklist, so we'll certainly be able to provide this to you. And just going through it, there's 6 pages. It really lays it out nicely, so you'll know what to expect. You'll have what to prepare.
So now we get into more of, okay, from the government standpoint, now how do we do that kind of thing, the submission requirements? And we talked about the mandatory DFAR checklist. We talked about the certification of certified cost of pricing data, or if other pricing data is required. And so there's things to consider. There's almost an art in doing a cost or price proposal. And it's not always straightforward, but a lot of the DoD contracts and their sections are laid out. And so I want to show you, because sometimes what happens is the pricing office wants it one way, which makes you violate your costing standards or disclosed accounting practices. So you need to do it both ways. And let me just kind of show you what we mean. Adapt your proposals to solicitation format. You must do what they ask you to do and propose it. However they put rates together. They may combine 10 firms together and say, okay, if you've got 3 subcontractors, add together with your own, which a little bit of that is not permitted. But, it might just be a way that's not the way you normally account for things. You put it in that format, but you also show it differently. Let's get into that. So the sections within the solicitation, which later becomes your contract document, all they do is switch it from an R to a C or a D or a G in the middle of the contract. Section F is usually the period of performance. G is the admin billing requirements, and also the ACRN funding tracking of funds if required. H usually gets into the limitations on cost. They might put ceilings in there. If they're indirect rate ceilings, it could be anything. I is, and under that is the list of clauses, like if there is a defective pricing clause, which in this case would be there. You can look for something like overtime premium. I think it's 222-1 or something, but usually the overtime premium is 0. They don't want you using overtime premium unless it's an emergency or something. And this section B is a pricing sheet that they have by contract line item. And so they may say, you know, propose all these years together. Propose two different firms, T&M rates, and blend them together, which now you're, in some cases, you're allowed to do. But what if you had to put 3 years together? Or, like I said, combining costs of your sub. Maybe just want to see your sub and you together. That's for them to evaluate. But then you've got to, and let's just say the total is $1 million. You've got to come up with element of cost the way your disclosed accounting practices are that makes up $1 million so that the government DCAA can see how you put it together. They understand you got to follow one and then the other.
So just a little bit of definitions here of the acronyms. We've got CLIN, which is contract line item, SLIN, subcontract line item, and then my favorite, ACRIN, which are sometimes referred to as ACRIN, but regardless of how you pronounce it, it stands for Accounting Classification Record Number. So how does that apply? Let's just say you had a contract line item for direct labor, and funding is on overall direct labor, but they want to break it down further. That's where the ACRINs come in, because the ACRIN would take your labor categories within your direct labor and have separate funding for each labor category as opposed to overall direct labor. It'll roll up to that level, but that's the visibility. It really goes back to how funds are appropriated by Congress that require that type of accountability. So that you have to say, okay, this labor category has X amount of funding to the extent that this labor category has Y. So that's what an ACRIN would represent. And again, it's an accounting classification record number.
So, as I said before, if B&L proposal format requirements are not consistent with your cost accounting system or practice disclosed accounting practices, prepare it in the RFP format, but prepare in a compliant cost accounting format as well. Explain in your proposal body the differences and why you did one thing one way and another way, and explain each of the elements of cost, how you came up with them. My indirect rate is based on a provisional billing rate that was approved by DCAA for this fiscal year, dated whatever item. Those types of things, they need to be in there. But also make sure you have a pricing team that is working together. So contracts, typically solicitation terms and conditions, you know, they or one of these groups are going to take the lead, depending upon how your organization is set up. But you know, the pricing group does get cost inputs from technical. And there's often a technical volume and a proposal or price per volume. And if there are hours, the hours in the pricing thing better be the same as the hours in the technical, as an example. So everyone still has to talk with each other. Finances, of course, dealing with DCAA often, unless someone else takes the lead on a proposal. And they deal with the forward pricing or the indirect rates, labor rates, establishing the procedures, cost accounting standards issues. So just remember that if you're under these certified cost of pricing data disclosure, do what we call a sweep. When you're ready to sign that thing, talk to everybody, make sure nothing has changed, or provide a table of assumptions relating to each part in the price proposal that's annotated, explaining the change and the update.
Sure. So once again, question came up, and
Good.
we'll go ahead and answer that right now.
Yes.
Okay, take a little break there.
Yes,
Paul,
thank
you've
you.
been doing great. But basically, the question is, can I repeat what a CLIN, SLIN, and ACRIN stand for? So contract line item, subcontract line item, accounting classification record number.
Great.
That's the
Yeah,
question.
we have a lot of acronyms.
We do. We probably, you know, when I look at these types of presentations, you know, I see CAS, okay,
Accounting
accounting standards, RFPA. Hopefully, people know that's request for proposal. But I guess the best practice is to you can use the acronym, but you should always define what they are.
Right.
It's just a pet peeve of mine, but never mind me.
So D/S is disclosure statement.
That's a good one. I would have never guessed.
Okay.
No, I'm joking. Go ahead.
So in the future, maybe I should spell it out. And we do. Oh, did I go back one too many? Is this where we should be? Or did I go one too many?
Yeah, you're fine. We're just on this slide.
Okay, great. There we go. Okay, so let's go into the DCAA audit. Now we want to see it from the auditor's perspective, like your perspective, the government's perspective, good old neighborhood, local, smiling neighborhood auditor. This is the time you want them to visit you. So, like I said earlier, I thought it was there somewhere in the slide deck. They're just like an ICE model that they'll review for adequacy. They're going to review the proposal package for adequacy. Kind of see, do you have the stuff? Yeah, back up. You know, they'll kind of know if it's just service, and they'll be looking at labor rates and things. Maybe a few ODCs if there's travel, those kinds of things. So meet with the contractor and do a walkthrough of the data. Walkthrough of the data is very, very important. Probably one of the most important communications between you and DCAA to make sure that they understand what in the world you're trying to do. So if it's not clear before they leave, they're not going to look at everything. I mean, in terms of auditing it, but you want them to fully understand. Because if there's a miscommunication, it will be like a snowball effect going down the hill. And they'll try to gain an understanding of your proposal and how this, and do you have supporting data and how it kind of puts together. You've got to have a complete file. You know, everything now is in a file electronically generally. Every item, every assumption, it all should be well defined. It can be written out too in the proposal volume. Generally in the proposal volumes, there are no limitations on words, only in the technical. Okay, so now moving into, as I go through this, we'll go back to what DCAA wants, but some best practices. Don't wait till the last moment to prepare your proposal. Errors might result. I can remember being in many of these proposal groups, you know, and the president would say, oh, I have fond memories of us staying up late at night, working together as a team, ordering that lousy burnt pizza. You know, that's not the way to run things. And yet I've seen it happen more than you would imagine. Set up a timeline, a sync timeline, or a Gantt chart or a PERT chart or something, and literally put in what is everybody's responsibility, when is the time on this, and so forth. And of course, this is after assuming you made a bid, no bid decision to move forward. So after that point, technically, you would charge better proposal votes than you should. Develop a formal estimating system. Must be a working process. It's really, you really do need, it could be as simple as a one page. Are you communicating among people? If you don't communicate, you may misunderstand. You wouldn't realize it, but as an example, just in getting ready for our presentation today, we went over check, like a flight list, checklist before an airplane takes off, like we do a presentation. Don't take things for granted. Things can be missed that you don't want to find later. And then DCAA sucks it to you because they say this is a problem and they send it to everybody. And the way they talk is so negative, you know, you'd think that, you know, you are a convicted criminal or something. So pre-established processes will help you to avoid state-effective pricing. And of course, DCAA will determine if it's adequate or not. If it's not, they'll return it. And we've talked about the Table 15-2 format. Contractor is responsible for that adequate supporting data. You have the burden of proof that costs are reasonable, if not just allowable and allocable. It has to be fully supported, very well organized. Remember they talked about it and prepared an index to put it together. The government's concerned not just they want you to be accurate, but more importantly, the basis and rationale of your various costs. Okay? And like I say, this is an art. And the best way sometimes, if it's either you learn it, So you're maybe in a junior position, you learn it from those above you, or you've moved from different organization and picked up that knowledge, or you work with consultants. It's a very niche, small group that can do this. DCA requests supporting documentation to support a proposal assertion. They want to know how did you come up with this estimating method? Well, we have some actual people. Then we had to put an ad in a paper, and based on the survey of talking with people, and I've seen this on the actual survey, 50 people, and they got a sense of what they thought the value was, and then they considered who they want to hire. Or they used a new hire letter. But you got to have some kind of basis. So, and they may, of course, the document should be already developed and ready for DCA. So support could be talking to people, cost records, your policies, procedures, management reports, even emails and correspondence, because the world has changed and all electronic. Now, DCA would like to talk to certain people where the data originated, or talk to the technical people. There's no problem. You have every right to join in and follow along. You just got to keep your mouth shut. If you don't provide it in a timely fashion, the information they want, they begin to think of it as a denial of access to records. They'll report it to the officials after 1 week, and probably they could cancel the proposal audit, which means you're not going to get the contract, which means then that hurts your revenue and everything else. So it's a serious, and they don't mind if it's in electronic format. Although now they say, we want an original electronic copy, and I'm scratching my head. How do you get an original electronic copy?
Maybe they're trying to speed things up, you know.
But how do you get an original?
Scan it.
Yes, now or you've got a document over the internet. But I mean, to say it's an original, I mean, just give us the document.
Oh, I get you. I get your point. You know, original or copy doesn't really matter. You're getting electronic content. I got you. Yeah. And again, you know, one of the challenges is while these proposal audits are ongoing, sometimes you've got the procurement looming, and if there are enough issues with your submittal, you're going to lose out because of the time it takes to go back and make corrective actions.
Too late.
It's too late. So you missed out on that nice contract that you were hoping to win. So that's another thing. And I don't know if this is a part of this presentation, but you know, a few years ago I heard it was, you know, if you could turn around a proposal audit within 60 days, you're doing pretty well. I don't know what the mean time is now. We looked at the ICE backlog and how that's improved. But I've heard contractors lamenting the fact that because of whatever reason, technicalities or whatnot, that the window closed. From the time they submitted the proposal to the time the contract was actually awarded.
Yeah, I've seen that happen too.
Yeah.
It's sad.
But getting it to them electronically and following the checklist and doing everything that we've been presenting today, presumably will cut that down so that the DCAA is going back and forth with your one liaison.
Oh, yeah.
With the one liaison. Yeah. Maybe that's why they want one liaison, so that they don't, you know, they have one person to deal with it.
One story.
Yeah. Exactly.
Let's keep it straight.
Yeah.
The exit conference that DCA provides is what they call the factual, meaning they'll say you have math errors, missing out years, or lack of documents. The judgmental, in quote, are the aspects that are not disclosed to the contracting folks. It would give them an unfair, according to negotiation posture. So assumptions are estimating methods that DCA may not agree with or question costs. Those things they're not going to tell you. The only way you'll get that is after everything is done, and then you can ask under the Freedom of Information Act, and you have to go to your procuring office. DCA will not provide it, so you have to go to the procurement office that requested it. And it's worth getting because you need to know what DCA is saying that you didn't have access to see. Albeit too late, maybe, but better to learn from it.
So yes, so now we're going to talk about automating your proposed labor and indirect rates, your labor rates and indirect rates. That brings us to our next polling question.
Yep, great, thanks, Chris. And our third polling question is, does your internal IT system provide the following information in support of historical cost or forward pricing data? Your indirect rate calculations, your historical weighted average labor category billing rates, your fully burdened job cost ledgers with contract inception to date information, your wrap rates by labor category using your indirect rates, and your labor distribution. So take a moment to record your answer. While everybody's recording the answers, I'll provide the third CPE word. Our third CPE word is TINA, T-I-N-A. Remember, if you want to receive CPE credit, please jot the word down because you'll need it for the survey following the webinar. Again, the final CPE word is TINA, T-I-N-A.
There we go. Pretty good response. So approximately two-thirds of the audience have some methodology of calculating their indirect rates. Much lower percentage can provide historical weighted average labor category billing rates. We're going to talk about that a little bit here in a moment. Fully burdened cost ledgers, about half the audience. Labor distribution, another two-thirds. So pretty good, I'd say. All right, so we're going to just we're going to go over some sample reports here to give you some ideas of, what kind of data is the DCAA or the Defense Contract Audit Agency looking for, not just as far as your cost proposal is concerned, but in analyzing your pricing data, but also in a pre-award survey. So, for example, on the standard form 1408, which is the pre-award survey of a prospective contractor's accounting system, there's a question number 4, and that question is, and it pertains specifically to today's presentation, is the accounting system designed and are the records maintained in such a manner that adequate, reliable data are developed for use in pricing follow-on acquisitions? So we're going to talk just a little bit to that. Give you some examples of what they're looking for. So let's talk a little bit about forward pricing. Effectively, what forward pricing is your best estimate. Going forward, based on historical data, what are your indirect rates going to look like? What are the labor hours going to look like, and cost by category or skill level? So we're going to go ahead and give you some examples of what that's going to look like. And as you can see, it says that labor must be summarized in order that the applicable overhead can be applied. What that essentially means is that in the case of overhead, you're going to be using a direct labor base as your allocation base for your forward price. And I've got a little war story to tell about that, but I'll hold off for the time being. All right, so indirect rates, forward pricing. Again, you have to have something that shows, and 65% of the audience already has this down as far as having a system that can calculate their indirect rates. You can provide the appropriate cost breakdowns. So when we talk about that, you take something like fringe benefits. You have historical information that shows we have this particular fringe pool. In other words, we have accounts that are fringe benefit related. They follow, of course, employees' total salaries and wages. That would be your allocation base. You want to be able to see the breakdown of that. So you're not just saying, okay, I've got fringe and I've got these, I've got this for an allocation base, total salaries and wages. They want to see all of the elements of cost that make that up. So here's an example of what I'm talking about there, analysis of indirect rates. This, for everybody, for our purposes, these are actual indirect rates based on a YTD, which stands for year to date, and period to date. So we got actual costs and budgeted, in contrast with budgeted costs. So your budgeted costs, think of those as your provisional rates. And as you can see, to my point, all costs. This is the detail the DCAA is looking for when analyzing your forward pricing rates. There's your expense pool, and this is overhead. And there's your allocation base, and as I mentioned, direct labor. Now it's summarized, but as you can see, you've got different components of direct labor, which they like to see. So you've got things like B&P, that stands for bid and proposal. You may have IR&D, which stands for independent research and development. That would all be included in your direct labor. Typically, I've seen companies that just say, well, B&P labor is strictly a G&A function, so therefore it's not going to be part of our direct labor base. We never have to pull a person who would otherwise be billable off a proposal in order to help us create the technical person. Yeah, technical person. And as you noticed when we looked at the polling question before, technical and operations folks getting involved, but they didn't have. That's actually the question was, who's most responsible? These people aren't most responsible. These are staff members that just basically have an expertise who would otherwise be out in the field. So the government gives you an opportunity to recover those costs through your indirect rates. But there's also the concept of overtime we talked about earlier. Overtime is typically not going to be allowed per the contract, but at least not an overtime premium, I should say.
Right.
Get an overtime premium.
So is yours overtime premium or just overtime?
No, that's just overtime labor. That's labor over and above a 40-hour work.
Where would the premium go?
The premium would be a part of your pool.
And then I've seen it also as another direct cost. It's interesting.
Yeah, it could
many different places.
It could, yeah, that's probably the best answer. It could be in many different places. But one thing's for sure, that when you're building out your rates, you're not including it in your allocation base. So that's the key. So along those lines, you can see there's a fringe allocation as well, if there is fringe being allocated to overhead labor, for example. And you have your indirect rate. So you have an actual indirect rate, and you're looking at budgeted. Now, what do I see right away when I look at that is that you're overspent on your rates at this point. Okay, but
just want to make sure.
But you're going to be looking at your year-to-date rates. That's just on a month-to-date basis, and I'll let you ask the question in a moment. But you can see we're from a year-to-date standpoint, we're doing pretty good. But anyway, that's the type of thing that DCA is looking for purposes of justifying your forward pricing rates, the historical data that you're able to provide. Go ahead. So
when you say period-to-date, that's like month-to-date?
Yes. And the reason we call it period-to-date, as far as our accounting system is concerned, because you can have, 445. You can have a different type of calendar as opposed to just a month end, a natural month end. That facilitates it. So therefore, it is truly your period date, whereas you can have a 5-week period.
Okay. Another question.
Yeah.
So down here, we have fringe allocation. If they did have other allocations like occupancy, or facility,
that could be part of it.
It would be a part, not in your example,
right?
It would sit there.
Correct. So if you have multiple intermediate pools, we call them, fringe is an intermediate pool, and occupancy is as well. So yes, they could be there.
Or service centers.
Service centers, yeah.
But he had the technical word. Very good.
Yeah.
Oops.
So anyway, there's an example of a detailed indirect rate report that proves to the DCAA, if you can show them something that is similar to this, that you do have a system that is adequate for use and pricing for follow-on acquisitions. All right, so historical data considerations, basis of estimate, do you have this type of information available to support the estimates? This is right out of the proposal manual. So to give you an example of more historical data, we're going to go to the next slide and show you another report here. Okay, so basically weighted average labor categories. So only about 1/4 of the respondents to the polling question have something like this. So why is this important? Well, when I'm developing my wrap rates, when I'm developing my costs for the labor on a particular contract, the reason we want to weight the labor categories is because you can see, like in this case, closeout administrator, for instance, you look at the hours that they worked in comparison to some of the other labor categories that are on this report. So they're going to get a higher weight, that 3165, and therefore when you see the task total and the contract total for the historical weighted average, that is getting the most weight, that 3133 per hour. So why is that important? Well, when the DCAA comes in to look at your time and material rates, for example, and that's where this really comes into play, is you should be ready to defend and explain and to justify to them how you came up with your T&M billing rates. So this is the raw cost of those employees. This is not a billing rate we're looking at. When we say rates, these are actual pay rates. You've got your burdens, which make up your wrap rates. You've got your fringe. You've got your fringe
everything but
allocation.
fee or profit?
Yeah, no fee or profit, because that's what they're getting to.
Okay.
So, for example, going back to the days when we were in the government contracting industry, when I say we have predecessor to whatever Inc., we were bidding on a contract and we had put our proposal in, and they wanted the data to see exactly how much we're, on a weighted average, how much we're paying each of the labor categories. And they also, wanted to take the burdens to come up with a wrap rate. And so, for example, in this case, you have a wrap rate of 31.23, and let's just say you had that's your raw cost, and then you have a wrap rate of 1.5, a multiplier of 1.5. Let's just say, I'm just throwing that out there. Gets you up to about $47 an hour is what you're paying these employees. So the question is now, what's your billing rate? So your billing rate's $85 an hour. You're paying them $47 an hour. We think you can actually, that's too big of a margin. You're making too big of a margin. We want to drive that down. So essentially, you got to be careful what you wish for. You have the data to provide to them, but again, be prepared to have to kind of justify it and defend it. And oftentimes they're just going to sit there and they're going to say, look, we just think that your margins are too high. Hey, we don't care what you've done in the past. We don't care, your past performance, and you have an escalator in your T&M rates. We want to see from our, you give us a better price. That's all. So this is where they're going to get that data in. So it's good data to have, but when they ask for it, be prepared again to justify your billing rate, and also be prepared to negotiate your billing rates. So that's on the direct labor side. So,
did it move?
No. There we go. So we've been talking about historical data considerations. So, does the proposal include labor categories or a statement of work, contract line items, work breakdown structure? What is the applicable history? How can you support that? So let's take a look. Look at a job ledger. Job cost ledger, and this can be run, and in this particular case, it's being run at the company level, but it certainly can be run at the CLIN level, the contract line item level, because as we discussed earlier, that is the area for which they're going to want to get the data, the supporting data. So in this particular case, you got a CPFF contract. In this case, that's neither here nor there. But what you're seeing here is in the far right column, ITD. That stands for inception to date. In other words, your contracts start to date, going back multiple fiscal years. Yes. Your year to date. Now, why is that important? Because your indirect rates, your provisional rates, or your actual rates, every new year starts a new rate structure. So your year to date rates, and then your month to date rates. So what we're seeing is the direct cost elements. Not a whole lot here as far as that goes. You've got one type of direct labor, and then you've got an allocation for fringe benefits, for overhead, and for G&A. It gives you a full cost ledger. That's another, we call it a job cost ledger, but oftentimes it's referred to in the industry as just a full cost ledger. In other words, all my direct costs and my indirect costs summarized onto a nice consolidated report that, again, gives contract to date information, year to date information. And I guess we're a little inconsistent because it does say MTD as in month to date as opposed to PTD, period to date. So that aside, we'll fix that. We've got the source code. But anyhow, we're using provisional rates here, as you can see. And again, you can calculate it at actual as well. But the CLIN detailed version of this report, and sometimes when you're doing these PowerPoint presentations, it's really good to get everything onto one page. But we want to run more detailed, and that's where you'd actually see, perhaps more of a breakdown than what you're seeing here. In other words, there'd be more cost elements to burden and so forth.
And what Chris has done a great job in trying to, as So Chris, do you want to, we
Well,
were
yeah,
discussing putting one thing on one page.
Yeah, sorry, we just, for whatever reason, lost our connection there, and I was actually finishing up that thought, so why don't we go ahead?
I was going to make a thought. And Chris did a great job putting this all on one sheet. But something you should know, and I'm sure Chris' system does it like many others, and where you see the direct labor, 39, you could have multiple overheads and multiple direct labor cost centers.
Correct.
So you may have an on-site, off-site. Maybe direct labor 39 is at your site and 40 is at the government site, and then you would have two overheads here. So there is a lot more detail that can be done, and I know the system does it, and we just want to bring that to your attention.
Yeah, because the devil's in the details, as they say, and the DCAA is going to ask for a lot of detail, but this will give them, at least for this particular roll-up on a company level, it's going to give them, at least a warm fuzzy that you have a system that can provide them with the historical data to support your follow-on acquisitions.
Right, and it can break down to lower detail.
Oh, yeah.
So in your system, let's say somebody is in the 39 cost center, but maybe they go on government site. So does that person's time then move over to 40, or how does that work? Cross-charging?
Yeah, it really isn't cross-charging. There's more of an explanation to it than that. That's kind of an old term, but effectively, yes, you can take on a different overhead if, in fact, you move from one cost center to the next.
Even for just a few hours? Or does it have to be a permanent thing? Say they just did it one day.
Effectively, it's how they're going to do their labor charging. So effectively, when you're doing your labor charging, when you're setting up a contract in the system, you define whatever cost centers that contract is, and if you have an on-site and off-site rate, as long as they're able to record their labor as being at the government site for that period of time, then in fact, it'll go ahead and handle that borrowed labor, if you will, at the folks at the remote location may need that person on site.
Okay, thank you.
So we just kind of covered some key pricing metrics, in support of your forward pricing model, which is, based on your estimating system. Again, historical costs. You have access to that to cost and budgeted data that illustrates like-kind projects. You've done this type of work in the past. Again, we talked about the weighted averages. We talked about RAP rates. Again, what RAP rates are your fully burdened rates. You take the raw cost of the employees, and then you add on the burdens for fringe overhead, G&A, material handling, whatever you have as far as your indirect rate structure is concerned, and then an indirect rate expense by year. And again, every year starts anew as far as your indirect cost structure is concerned. So that's why you have new provisional rates every year that you'll submit to DCAA as part of your incurred cost proposal for them to go ahead and approve or disapprove. So.
Okay, we're going to go to a sample price proposal, a different document that will be available to you. And where we're looking at is an overall document, and it starts on page 24. This is the DCAM, Defense Contract Agency Manual. You see the number with it. And it has a lot of examples for incurred costs and things, and we're getting into the proposal part. So if DCAA is going to show us an example, it would behoove us to follow that example to some degree. And so what happens is on this is the summary sheet we were talking about, if you remember, back in the table 15-2, 15.408 under the FAR. And they made up a contract. Notice it is an R, the solicitation, which, let's say if they want it, might be a C if they win it. This is the address, the contact information, and so forth. Audit office, all that. And what's the total cost, fee, and so forth. Knowing that it's cost and fee, it's probably CPFF versus cost, profit. Well, it does say profit or fee, so we're not sure. Under the old document I'm telling you that they used to have, it would have a little bucket that would say this is T&M, this is fixed price, or CPFF. So still not sure. You might want to make it clear what type of contract form it is. Government property, talks about cost accounting standards, they're not subject because they're a small business, and they go through all those questions. And are you at least compliant with your disclosed practices? There we go. No aspect of this proposal is inconsistent. Why not just say this proposal is consistent? DCAA is into negatives.
That is for sure.
Yes, this proposal is consistent. Well, then there's positive on this. With established estimating accounting practices for FAR. Yep. The cost principles, FAR Part 31.
There you go.
And then it deals with the last thing that reflects the actual cost of data agreement on price and all that cost of go.
John, there's that reference to FAR 15408 in the table, what they call a table. So I think one takeaway of this webinar is if you're not familiar with that clause of the FAR in that particular section, become familiar with it.
Yeah, and also to not be thinking it's a table, but really it's just really a, I don't know,
we don't care
information.
About the semantics as far as that goes. This actually comes right from the information for contractors.
Yes.
In there.
Yes, and this comes also the stuff comes right from the FAR.
Yeah.
You know, so they're just copying it over.
That's correct.
So that's why we're saying at the beginning of the day when was talking about the sources, everything is government.
Yeah.
And this time they don't mind if you plagiarize. If you follow the government, they'll be very happy with what you've done.
I mean, they're the same way with the ICE. You know, some folks will say, well, we don't use the DCAA ICE format, the incurred costs electronically format, and the DCAA oftentimes will push back just on that because you're going off the playbook as far as they're concerned. So yeah, this is what you want to follow. This in this order, as a matter of fact, but it does make sense.
And what is interesting about DCAA, if you notice, is that they still can't get off the fact, well, that most firms are really service, and this is something that doesn't look service-oriented, if you know what I mean, because you have engineering and manufacturing labor and one overhead. So what's going to happen is the two engineering and manufacturing labor can be summarized. The key here is not to get so into this type being a little bit more manufacturing or fabrication oriented, but to see that this is a summary page. This is a summary, and you're going to see some detailed pages. I think this is a 3-year kind of award. You'll find the years are old, but doesn't matter because 09 would be like 2009. But the idea is just the concepts themselves. So you notice on the right, after amount, is references, Schedule 1. So everything is backed up, and then to the schedules, there's further detail. Of course, I'm not going to show you that because that's a lot.
I think I read somewhere, not to contradict you, Paul, that approximately 40% of all government contractors, I mean, we're talking about the Washington, D.C. area where this broadcast is coming from today. Yes, they're mostly service providers. However, you get out to areas outside the Beltway, outside of D.C., something like 40% of all government contractors are involved in manufacturing in one way, shape, or form. The government contractor that we had was was a service provider. We weren't considered a manufacturer because we were working with telecommunications equipment, and we were repairing it, and we were refurbishing it. And even though it was all services, it was really in their mind of manufacturing.
Okay. Maintenance. All right.
Maintenance was manufacturing. That is correct.
All right. So this is a summary page. We only have about 9 minutes left or so, but we'll just kind of quickly go through it. I never intended to just, do the math for you or something, but now you can see this is a proposal for 10, 11, and 12, 2000. And you can see the breakdown of it. But when you add all this up, and it says 42,151, just to show you one number, I'm not going to do them all. There it is, 452,151 for that engineering labor, 42,151. The same will happen for manufacturing, which they have fabrication and assembly, and the two, and then the grand total, and then they're going to apply the overhead on it. And you see the rates, hopefully, that DCAA sees it too. There's escalation in those rates. There's an art to putting these things together, and here are your engineers. You might have some where you're going to do something and you provide the labor rates, and other times the government's going to say how many hours they want of a certain type. Is it wage determination, SCA Service Contract Act of 1966, 5. So there's just a lot of minutia behind this that's going to be it. Now, if you have service contract, I think you don't need to provide anything else unless your people are making more than that. So it's just something to, there's so much here. You do this. There we go. And they have some write-ups below it. But just to give you a sense of the format, this is the bill of material now because it's only, would say essentially for the whole thing or one CLIN. But if there were multiple CLINs, they'd want to see this for CLIN 1, CLIN 2, CLIN 3, and then you'd have this kind of detail for each one. And you can see this is something for some of us service people we don't see. Sheet metal per yard, you get a price, and all the way down. And I think they got some from Acme, and some from Halloween. Yeah, Springs R Us catalog. So they're a little creative too. And they applied their overhead for material handling at 5%. Then I think we go into just how those things, those rates are proposed. Yes, this is their overhead. Notice when DCAA says we want you to cover all the years, they only have a budget for 1 year and would straight line it out, the rates, but there they are. And it starts with the typical kinds of overhead expenses. There was there one unallowable? Yeah, entertainment, yeah. 50,000 that they pulled out. Now, do you think you'd really estimate entertainment? No. Probably most of us, we're just not dealing with entertainment.
No, we're not going to put that in our proposal.
And wouldn't have it probably realistically. But if you're a large entity where the government contracting is a small piece, then you have to live with that.
A better example might be interest, you know. You might have a line of credit, so bad debt if you have commercial business, you know.
And hopefully not with the government, or you didn't do something right.
Right. That's one good thing about the government is you don't have typically, unless you didn't
really mess up.
Yeah, unless you really messed up. Yeah.
You'll get paid.
Yeah, that's right.
And so they computed a rate of 56.7%, which is again up on the front page. Then here's the G&A piece. And they go through the whole thing, and they even add R&D and B&B, and they add some overhead to it. And then they move things out of the base, and I'm not going to spend a lot of time, but the resulting rate, I think it's on the next page. I wonder where that rate went to. That is, 8%.
Yeah, right there.
And then they go through again their explanations, which you can read yourself. I don't want to just, read from a slide. I think that would not be fair. And then this is the backup of the material handling overhead or pool, where you have both purchasing and receiving. So again, 24 to 32 from this page, and let's just see if I can do one thing real quick. Oh, I can't. Can you make that a 1 and just go to the very top so I can see the name of the document again and just move it? Very good. Thank you. Information for contractors. And so you can see just where this is, and it goes through a lot of really nice stuff. But know this before that. See here, 3 price proposals. You actually got, a sample one. So now I'm going to turn it back to you.
Sure. Thanks, Paul. And so before we wrap up today, we have one final polling question, and it is, are you interested in having a webinar about a contractor purchasing system review? And this one's a simple yes or no response.
And no code for a CPE?
No code for the CPE, only 3 CPE words today, but take a moment to answer, and also note that you may use the survey that's going to pop up at the end of the webinar to suggest topics you would like to see in the future.
Good. Well, that tells us.
CBSRs are popular these days.
Well, the reason is because it adds 500 some odd points to your evaluation. But currently, right now, I think, they're usually done by the federal government, by DCAA. But right, they're beginning to allow third-party CPA firms to do them above. We've done that.
Okay, excellent. So before we wrap up, we have some questions submitted by our online participants and others from the room. And so the first question is, can I use my forward pricing rate proposals to submit a proposal to the government? Paul, do you want to?
Yes, you can. Absolutely. Or if you call it a provisional billing rate, or you just estimated it and DCAA didn't review it, yes, you can.
Okay. Chris, what overhead rates should be used when submitting a proposal?
Your provisional billing rates. You want to use your PBRs, your provisional billing rates, never your actual rates. Quick little story about that is Contractor I came across a few years ago. They calculated their indirect rates and actuals and used those for the proposal. What did they not take into account? That in the case of overhead, when they won the contract, they'd be adding more direct labor. When they added more direct labor to their base, what do you think their actual rates became vis-a-vis what they were before they won the contract? Yes, they went lower. And guess what happened at the end of that contract? They owed money to the government. Okay. Thank you.
Wow. Okay. And one more question. How best to prepare cost proposals as a new small business government contractor where you have little government contract history? Paul, do you want to take that one?
Yeah.
So you got nothing to go on.
Yeah. What we have done is we have, first of all, and that involved indirect rates as well? Yes.
Yes.
You have to have an annual budget. The only way you can do anything is, nonprofits are disciplined and they develop annual budgets, but government contractors, you need to do that. If you can develop a detailed annual budget, then from there, once you got the financial statement of nonprofits, income statement, then you have what you need to begin to say, okay, I've now parsed out what's direct, what's indirect, like I have one person, let's say, it's just starting, G&A, and the rest, the 3 or 4 are direct. And so, or percent of a person's time. And in fact, I've actually built that into a pivot table because they're small generally, it's like 100 people just starting. It's from the ground up. But once you're able to do that, you can then put together an indirect rate, and then you say, well, how do I support the data? But I even went as far as on the side for every person, that's when you have new hire letters. If we win, if we start, here's their supporting rate, and then the non-labor and so forth. But you got to parse it out if you're going to build a budget, the direct, indirect, and what your different contracts are.
Perfect. That makes sense. And just remember, if you have any additional questions after today's program, please reach out to us. Our contact information is listed here. And so with that, we'd like to thank everyone for attending today's webinar. We encourage you, as always, to follow us on social media at GRF CPAs and to visit our website at www.grfcpas.com for upcoming events and alerts. And one final reminder to please remember to complete the emailed survey that follows if you'd like to earn the CPE credit for attending today's webinar. Thank you all again for attending and have a wonderful day.